who here feels that life is getting more and more expensive? Don't be ashamed. It's getting expensive. I mean, it's not just me saying it. It's the European Investment Fund, it's the banks, everyone. Now, I think more and more people are starting to think about, how can we save money? How can we get our wealth into, making it productive? So precisely to do that is actually not that easy because each person is different, each risk tolerance is different. So precisely to talk about how you personalize that, how you manage your wealth, how you hyper-personalize your wealth management through AI and technology. Please welcome our first startup of the blog, Avenir, with Jeremy Bensoussan.
Hi, everyone. Thanks a lot for the introduction. I'm Jeremy, CEO and co-founder of Avenir. And today, I'd like to keep it a bit simple. So let me tell you a bit of a story. 9 months ago, my co-founders and I decided to create Avenir. And we quickly got accepted into Techstars. The purpose at the time was to help financial advisors personalize their investments. So naturally, we started talking to a lot of them. We checked their interest for private market, for thematic ETF, for sustainability data. And one day, we landed on a new technology called direct indexing. It basically enables any financial advisors to personalize any ETF without loss of performance. It sounds amazing, right? So we successfully raised the pre-seed, we created the MVP, we went on the market with it, and the feedback was unanimous. We love it. But it's not priority. After 1,000 insights on the industry, we finally got the most important one. The main priority of advisors is time. Not personalization, not fancy investments, time. And one of the big pieces taking them a lot of time is called suitability report. It is a report they have to create explaining why their recommendation fits this specific client. It's a 50 pages document, mainly text. It's built aggregating more than 6 data sources. It takes 4 hours for each client every year. And to create this, advisors rely on legacy softwares like this one, or even most of the time, Word. Do you realize in the era of AI, this is the standard? So we decided to create our own product leveraging AI. And we managed to make these 4 hours per report turn into 25 minutes. That's 26 working days saved per financial advisor per year. 26. We recently went on the market with it, and we opened a demo and a waiting list. And since then, we've been receiving daily organic inbound to access the software. So here we are, a team of serial entrepreneurs, ex-Revolut, ex-MasterCard, ex-Deutsche Bank, who decided to give advisors their time back so that they can take care better of their clients and their prospects, so that personalization and sustainability can become a priority. If you believe in what we do or you are interested, please let's have a chat. Thank you.
Merci. Merci beaucoup, Jeremy. Question from our judges, please. That was fast. You know the drill. He runs with advantage.
Hi, félicitations. I have a question about what is the difference between you and a robot advisor, because they are also helping the wealth manager in that and their work. And what are the competition that is existing? Thank you.
Definitely. So where a robo-advisor will act mainly to recommend new investment or the investment most suited to you, we help financial advisors create systematic reports after the investment recommendation is made. So the advisor itself will make the recommendation based on their own investment decisions, and then they need to explain thoroughly why they make this investment decision. And we automate the full process. And it goes super quickly. You just upload everything that you know on your client. We extract all the data, and you have your report that you can share with your client. Super 3 easy step. In terms of competition, mainly Word, like I told before. And there is also some legacy softwares that are trying to automate some workflows. We can quote Genovo, we can quote Ateb, at least in the UK. But these still reduce only from 4 hours per report to 3 hours, 3 hours and a half, because it's only front end.
Andres?
Thank you. Thank you for the presentation.
Thank you.
So you say your clients retain much better its own clients. So can you share a little bit of the KPIs, how are improving your clients' KPIs with us?
Yes, definitely. So right now we are focusing on the long tail, so IFAs or independent financial advisors who don't have any system or don't have any API. But we are also right now investigating or selling to platform and back office system who needs this kind of technology, and we interact with them via API.
Okay, we're out of time. I'm sorry. So please, big applause for Jeremy.
Thank you.
Merci beaucoup, my friend. Okay, so now we're flying back to Spain with someone that has extensive experience in the fintech industry, worked at a bank, then he was a manager at Anti Ventures, and they've now co-founded and created probably one of the hottest fintech companies out there. Like everywhere I pitch it, everyone goes like, oh yeah, we know them. Oh yeah, we know them. Because the truth is, it's not that easy to be able to invest in private equity markets, much less to making it accessible to most people, to the traditional or to more of the retail investor. And while there's some options out there, they don't go as detailized, as deep as the next solution goes. So please welcome our next startup, all the way from Spain, Ramiro Iglesias, CEO and co-founder at Crescenta.
Thank you very much. Crescenta is here to bring you the relevant investment for your future. Private equity fund investing has been the secret weapon for family offices and institutional investors. Unfortunately, retail investors have been missing out. A retail investor thinks that obtaining a 3% annual return on their investments is normal, and also having a lot of volatility. The truth is that family offices and institutional investors have been consistently obtaining 15% on a yearly basis return and duplicating their wealth over years investing in private equity. We have closed the gap between institutional investors and retail investors. Now, any individual investor can invest in the best private equity funds worldwide through Crescenta. This brings a lot of return on a yearly basis and also reduces the volatility and brings a lot of diversification for any given investor. Crescenta is the first Southern European digital asset manager, and we are aiming to become not just the first, but a market leader. There is a favorable regulatory environment. It's a $100 billion market with an expected growth of 8%. And just in Spain, we are aiming to impact between 2.5 and 5 million individual users. The founding team, we are unified by a purpose, and the purpose is to provide the maximum return to our investors and also provide an optimal investment experience with technology and financial education. Crescenta is a gathering point for every active investor. Crescenta is not just for individual investors. We are lucky that family offices and small institutional investors are confident in investing with us for the long term. Crescenta has a great success formula. We have a B2C business model, which is distributing international private equity funds to the retail. We also have a B2B software as a service for family offices, and we have an educational platform. The educational platform is great because it has a huge social impact. We are very interested in impacting the community by educating them in financial literacy. So first, Crescenta is a digital asset manager. If you want to invest in a private equity fund, you need to have a wealth of around 5 million, and you have to have a minimum ticket of 150K. With us, with 10K, you can invest in the best funds worldwide, EQT, KKR, CVC, any given fund. We are in due diligence with Sequoia, for example. So we provide access to the best product out there for any given investor, and in a very easy and convenient way. In just 10 minutes, you can invest in the best private equity fund worldwide. With a bank, it takes more than 3 weeks. On our B2B business model, what we identified is that family offices that are super active investing in private equity, investing in venture capital, they have a huge lack of control of their investments.
Out of time.
Okay.
Final.
Yeah. So can I
Final one. Go.
Final one. So we go to market 3 months ago. In 3 months, we have managed to do our year one objective in just 10 weeks. We have fundraised 40 million. We are aiming to fundraise 150 million in year one. We have more than 2,000 people registered and more than 300 active investors.
Okay. So, big applause to Ramiro. Thank you very much. I hate to be the guy because I'm a big fan of what you guys do. I mean, oversubscribed. That's a great problem to have. Judges, questions, please. Over there. Microphone at the back.
Thanks so much for the presentation. How do you convince these funds that are doing so great? I can imagine that they're not having problems fundraising.
Yeah, it's a great question.
Open up.
We approach the best funds worldwide, like Insight, EQT. What they see in us is the social impact that we're generating with Crescenta. It's not just empowering the individual investor by providing them with a quality investment opportunity, but it's also generating a community of impact. When you invest in a private capital fund, you directly invest in the real economy. You invest in companies that are funded in startups, and you contribute a lot to your environment. So what they see is that with us, they can have this impact in their community, and they are positive that the retail investors deserve to invest better and to have a lot of confidence when they are investing on the long term.
Okay.
Thank you.
Any other question? Anyone? No? Okay. Well, then, please, big applause to Ramiro. Thank you very much for joining us. And now we're flying all the way to Austria to fix something that most people forget, which is while we live in a connected world, the regulators do not live in a connected world. Which means that every time you go to a new country, you have to deal with local regulations, and that's a pain in the ass. The question is, can we scale that? Can we have someone that deals for that for us? So coming all the way from Austria, please welcome the head of sales at Fiscally, Elias Priesching.
Hello, I'm really happy to be in Madrid, especially after Real Madrid won the Champions League again on this weekend, so congrats to all the Madridistas in the room. But now I'm here to tell you why Fiscally is such a great business, actually, and maybe you recognize this slide is empty. This is another story. What's behind that? Let's get started. How many of you like to pay taxes? Me personally, honestly, I'm not the biggest fan of it. But 93 billion euros per year are lost in tax revenues by governments. And this situation is pretty much the basis for the business model of Fiscally, because governments want to get this money as well. So what are we doing? This is actually us. This is Fiscally. These are our people. We are now more than 85 people. And we truly believe that we as a team are more powerful than each individual. And what we do is we are providing compliance as a service for a specific sector. So we are talking about point of sale providers. You know, the point of sale system, for example, H&M is using, or the Apple stores are using. We are providing the legal compliance component for that. We know it's a niche, but as Sam Altman, for example, also says, find your niche and excel it, and this is what we are doing. We were founded in 2019. We have now 6 solutions, and we have more than 650,000 POSs using our solution. Which brings me to the timeline pretty much. So at the moment, we are market leader in the DACH region with Germany and Austria, because Switzerland doesn't have such a legal compliance topic, but probably in the future. We are now in the expansion in Spain, because also in Spain such a compliance topic is upcoming. Italy is in preparation, France is in preparation. We are in discussions with African governments to also make their fiscalization happen. Let's see. But probably what's important, so, scusi, we crossed the milestone of make more than 10 million AR per year. We are profitable and have been profitable for 2 years. We are on track to make another 50% revenue growth this year, and we actually have no churn rate. Thank you for listening.
Thank you very much. Dankeschön. Okay, judges, questions to Elias. Any question? Andres, please. Thank you.
Hello, thank you for the presentation. So, who are the type of clients you are working with in Spain? Thank you.
Yes, so for example, clients in Spain, there we are talking about Revo. Could be a company using our system. So we are pure B2B player. H&M could be a retailer using our system. They are developing their own point of sale. You know, the cashier is typing in that you are buying a fancy T-shirt whatsoever, and this point of sale solution in the store is connected to our solution. And pretty much that means if our customers and partners are scaling and selling more units of their POS, they are reselling our solution.
Okay. Any other question? No? Okay. Well, Elias, vielen Dank. Big applause for him.
Vielen Dank.
Dankeschön. Okay, now we're flying all the way to Colombia, and this morning I was talking about this, how sometimes we live in our tiny little bubbles. And I always make this reference here in Spain. If you're a Spaniard, normally there's 2 things that happen when you're born. The first one is that you will be from a football club. I'm sorry for Barça, but a la Madrid, okay? I'm just going to say that. And the second thing that happens in this country is that they open a bank account for you. So the babies, all the babies, nearly every single baby has a bank account. So for us, the notion of unbanked, the notion of people that don't have access to credit, and this is, I'm extending it to the first world countries and the Western nations, it's not that, it's pretty unheard of. However, most of the world is unbanked. Most of the world has a lot of issues getting credit. So precisely to fix that, I want to welcome our next startup all the way from Colombia. Please welcome Andrés Lodoño, CFO at Monet.
Hi, we are Monet, and we are revolutionizing how we think about financial inclusion, especially in Latin America. Most of informal and formal workers in the region faces challenges in between paychecks where they need extra money. The only solution they have are informal lenders that uses violence and other means as way of collection. In Monet, we are revolutionizing how we think on risk profiling these people. So we created an app that relies only on open banking. So regardless if you have a digital wallet or a bank account, actually a lot of informal workers and sellers in Latin America uses digital wallets for their sales. They can use Monet. We can give you a loan within 5 minutes, just analyzing the transactional ledger from your bank account. And we also leverage open banking for automated collection. So on payday, we automatically withdraw from your bank account or digital wallet. We do not need any credit history, but we do report the people that pay on time to help them build their financial life in hand with Monet. We have an extreme advantage on our distribution. We are partnering up with big players and incumbent players in the region. We actually partner with Bancolombia and Nequi, where Monet is a lending solution in their apps for those that they normally oversee. So this allows us to reach a market of over 20 million people. We are also helping other banks to underwrite their loans and understand better how informal people work. We are helping Banco Agrario with our risk score so they can open up their services to more people. And we think about this product of cash advance as the base of a pyramid of a larger environment. We are building an in-house marketplace so the users can already pay utility bills without leaving Monet. We are issuing a credit card, and we are also innovating in nano credits for informal and formal workers. We are by far the cheapest solution in the market, and we think the price is pivotal for financial inclusion and for being a real and a fair solution against informal lenders. We are an impact-driven company. We have actually helped more than 99% of our users access different products such as telecom, internet, where they look at your credit score app. We have helped 20% of our users to access credits in the formal sector, and 10% have got a credit card. We have seen continued revenue growth by maintaining the cost of goods sold steady. This year, we're forecasting reaching $4 million in revenue. We have a default rate of less than 4%. If you think about, we are in the base of the pyramid, and we accept more than 55% of credit requests. We have also a great LTV.
We're out of time. Final comment.
And we are also backed by Y Combinator, Harvard, K5, Inca Ventures. We're currently raising our Series A.
Thank you very much, Andres. I hate to be the bad guy. I really feel bad about this. Okay, judges, question. We have two over here.
Hello. So you're starting in Colombia. You mentioned at the beginning that you are planning to expand to Latin America.
Yes, sir. We are currently expanding to Mexico.
Plans? Can you tell us about your expansion plans into other markets and how you're going to do it?
So we are currently making the strategy for partnering for expanding in Mexico. We are already talking to a major player, a bank player in Mexico for the disbursements and collection process, just to kind of replicate the infrastructure we have in Colombia. We are going to go live in next quarter.
Okay, we only have time for another question, so you guys choose.
How do you see the future? Would you like to be a digital bank? Would you like to be a software as a service company? So which will be your strategy in the near future?
We want to be the ecosystem for financial inclusion. That also means microinsurances, that is also an under-regarded sector, helping incumbents tackle the base of the pyramid, because we are not going to offer every service that this kind of customer needs. So we also need to partner up with different companies. And we also want to offer loans to any informal or formal worker earning around their minimum wage in Latin America when they have any emergency, when they need extra liquidity.
Okay, well, please, big applause to Andres. Thank you very much, all the way from Colombia. Thank you.
Yeah.
So we're staying actually in LATAM, and we're now flying to Argentina. And I was just thinking about these things that happen. I don't know if it happens to you, but every time I go and put gas on my car or go to a shop, they go like, do you have any loyalty cards? It's like, which one? It's like, well, we have this one, that one, that one, that one, that one, that one. And then, half of my wallet is loyalty cards. My wife keeps telling me, it's like, you're a shitty discount hoarder because you never get discounts. It's like, it's just too much, too many things to remember. Well, there's a way to fix that. And actually, our next company is trying to do that at scale. So all the way from Argentina, please welcome Javier Arguello, CTO of Curable.
Thank you. Hi, everyone. My name is Javier Arguello. I'm the CTO and co-founder of Curable. And we are integrating payments and allowing businesses to create true ecosystems. And this is why we're changing loyalty. So traditional loyalty programs fail to customize the customer experience. They're also very, very difficult to maintain and build when they grow large. And this is particularly true when, for big companies, this is a major pain point in the industry today. Also, points and benefits interoperability is a challenge. We strongly believe also that the integration of payments into the transaction is critical for success, as many people would want to combine their loyalty points with other payment methods when paying for services and goods. Now, a lot of people believe that, and myself included, there is an urgent need to innovate in this space. A lot of people think they want more control on how they use their benefits, their rewards. And this is just for a start. So we are a team of second-time co-founders. We've been working together for more than 15 years now, and our previous venture was sold to Mercado Libre, mainly Nasdaq, in 2021. And it's that experience that we want to bring into Curable today. So our target audience are enterprises of all size, mid-sized brands. We are currently operating in Latin America, Argentina, Chile, and Peru, expanding to Mexico this year. Market size is significant, probably Brazil by 2025. Some of our customers in the region include a low-cost airline, digital wallet application, and a pretty large gas and oil company. Those are actually pretty interesting use cases. So Curable is redefining loyalty by creating a comprehensive all-in-one platform. That means that we are giving our customers a prepaid credit card. We offer them points interoperability and also a gamified experience. Also, because we are giving a prepaid credit card to our customers, this can transform loyalty programs into a bank-as-a-service solution. We streamline all the process of issuing and the clearance of points as tokenized debt as a stablecoin using blockchain technology. Also, partners within our ecosystem using our technology stack can connect for cross-benefits. Now, we've been profitable since February this year, 2024. We are growing at a 5x ARR now, and our revenue stream model includes setup fees, transactional fees, and subscription fees. So we are leveling the playing field here for loyalty. We are enabling businesses to create true ecosystems and driving more sales through loyalty innovation. So my name is Javier Arguello, and I'm really looking forward to have a conversation with you about how we can innovate in loyalty. Thank you, everyone, for your time.
Thank you very much, Javier. Okay, judges, questions, please, for Javier. Anyone? Yep, we have one over here.
Thank you very much. Quick question. Why do you need blockchain to deliver value to these companies? Can you not do it in a separate system? And is the added friction worth it for all players in the ecosystem?
So we are using Backlog as a backend now. Thus, it's not really exposed to end customers. Not yet. That is in the roadmap. So that means when you enroll on board into a new loyalty program, you are assigned automatically an address on the blockchain. We are using Algorand at this time because of cost and the transaction speed. And we are doing settlements every 2 weeks, and we mirror points and some other kind of information to a blockchain. And that it's enabling our customer, particularly this low-cost airline, to create in the future an ecosystem. So it provides transparency into the loyalty program network, and we are bringing more partners into that ecosystem using the blockchain technology in the future. That is not something actually you will find using today as a member. You will fly, you will get assigned benefits points, and in the future we are going to allow people to take ownership of their wallets and use those stable coins that were created in blockchain to buy or exchange it for more benefits, right?
Okay. Well, without further ado, then.
I can add something additionally. So we pivoted the product 3 times. We started as a Web3 100% company, and then we switched to a loyalty platform based on benefits, Web 2. So we are not entirely Web 3, we are Web 2.5, I guess. But we do believe that if there is an application in the future for blockchain, that will be on loyalty.
Okay, big applause for Javier. Thank you very much for joining. Okay, we're nearly there. How is the heat going? Yes, sauna is working well? Good. We sometimes think that Finland is the only one that has sauna. We do have sauna. This is why my Finnish friends, they go like, yeah, go to sauna. It's like, dude, I'm from Spain. We have sauna 365 days a year. And they don't get it. They go like, what? I'm like, okay, whatever. Come here during summer. Anyway, so we're flying now back to Spain, and we're going to be talking about something I think nearly every single one of us has done, which is the awful moment where something you bought is not the right thing, not the right fit, not the right size, might be damaged, and you have to return it. And then the fight begins. Ready, fight. Try to return something. Some companies make it easier than others, but it's still there's tremendous friction in the process. And more important than that, it's still very unsustainable. So to bring sustainability and frictionless to the return process, please welcome our next startup, the co-founder and co-CEO of River, Marius Monmey.
Yeah, so exactly. We buy and receive any product online from anywhere on the planet, and we receive it in 24 hours. But when we want to return it, the process is much longer. So we ask ourselves why there's such a big difference between buying and returning, and how can we solve this? When digging a bit more into the problem, we saw that the returns were booming, especially after COVID, and it was a super relevant problem, both for brands and from shoppers. There's a lot of problems with the process. It's super long, it's super costly for the brands, it takes forever for the shopper. So we solve this by making refunds easier and faster. For the shoppers, they can request a refund in just 2 clicks, they select the products they want to return, and we instant refund the money in seconds. So instead of having to wait these 2 weeks, we make an instant refund where they get the money in 15 seconds, dramatically changing their experience. And then we have another algorithm for brands where we can incentivize the different options we have for their shoppers to reduce up to 45% the returns they have. Thanks to an algorithm that predicts what would be the best next purchase or what a gift card can do for the shopper, we're able to reduce this 45% on returns. We're doing all of this in a 360-degree platform where we integrate with their carrier logistics, we make the process easier for the shopper, they don't need to print a label, the process happens much faster, it's more sustainable, so everything is much easier, both for the brands and for the shopper. We're already having some traction, so we were born 2 years ago. We have operations in more than 65 countries, done refunds for more than 30 million in euros. We have hundreds of brands using our products, and we have done thousands of refunds. So a bit of our journey, we launched our product 2 years ago. We raised our first pre-seed round. We got into YC. We launched our product in Spain. We then launched it in France, Italy, Portugal, until today, where we operate with 300 brands, including Desigual, Tropic Field, Adidas, like some of the big brands, in Spain, Europe, LATAM, and US, and with the plans to keep expanding on our value prop. So we are in a very unique part of the process where we help on the pre-checkout, because making returns easier makes people buy more, but also on the P&L of the shopper. And we do all of this by making it frictionless and with a risk for the shopper. So that's a bit our roadmap. We started with refunds, which was a super obvious problem for our brands, but we're expanding our value proposition. We see that the data we have, the algorithms we have, and the technology we have enables e-commerces to provide much more insights and reduce returns and refunds.
I love that. That was a mic drop, and we're done. Okay, questions, please. Over here.
Thank you. So your business is highly dependent on debt. So kind of what is your plan in the long term to step away from that? Is it kind of the data angle? Or?
Yeah, so for the instant refunds, depending on debt, we have a separate debt facility that is already raised. We have worth of hundreds of millions already, and like the business model that's similar to buy now, pay later, but with much less risk because it's transactions that already happened and we're just refunding them. And on the other hand, instant refunds are becoming now a bit less relevant for our business because we're able to use this other part of the business, which is incentivize the shoppers to choose different options and reduce refunds for the brands.
Okay, any other question, judges? No? Yep, over there.
Are you also monetizing this second solution? Like, do you take a success
Sorry?
fee? Do you also monetize the solution where you suggest alternatives that they can exchange products
Yeah.
for?
So that's a pretty interesting part of the business. Since we're able to reduce the refund amount for the brands, this has like huge economical impact. We have a take rate of the reduced return rate that we have. So in big brands like I don't know, hundreds of millions on revenue, which reduce a 5–10% of the return rate. Our take rate on that is between 7 and 10%. So it's like quite also yummy in terms of economics.
Thank you.
Okay, thank you. Cool. Big applause. Thank you, Marius. Okay, how's everyone doing? Good? So far, so good? Okay, so a couple more, and then we move to the next block. So now we're flying to a company that's split between the UK and Ukraine and trying to solve something that I think it's becoming a very, very large issue, which is the amount of SaaS accounts that we have, the amount of corporate cards that we have, the amount of services that we have in any organization is just getting out of hand. And it's not just dealing with it, it's just how do you optimize it to make the most out of it and not lose any money. So to talk about that, please welcome on stage the head of partnership at Spendbase, Sofia Sherbeyuk. Big applause. Thank you, Sofia.
Hi, I'm Sofia from Spendbase, the platform for companies to optimize SaaS, cloud, and corporate card spending. An average company of 500 people in the US and Europe pays for 130 different SaaS tools, spending $2.5 million annually. And 35% of those expenses could be saved. Companies choose pricey licensing models, don't track which software they're paying for and whether employees actually use the licenses they're buying. Also, companies approve and reimburse employees' expenses manually, which is inefficient. Imagine it all results in wasting of $2 million annually per company. At Spendbase, we reduce SaaS spending by 35%. We give companies exclusive SaaS deals negotiating with vendors on pricing. We spot and use licenses, automate billing and renewal, and provide companies with analytics on their expenses. We're also launching corporate cards. So companies get an easy-to-use virtual bank to keep track of their spending. Companies issue virtual card assigned to employees at spending limits, and then get cash back on each transaction, automated approval flows, and reporting. The best part, Spendbase is a completely free product that saves you money for using it. Because we charge just 25% of the money we saved, with no upfront payment. We already have 200 customers all over Europe, in the US, some in Asia, from 10 to 6,000 employees, but we're focused on mid-sized for now. We're completely bootstrapped, and we have 150K MRR, growing 15% month over month. This year, we plan to scale 5x. We're already a team of 76 people. Here are the main roles, having 5 to 10 years of experience in the field, and we're ready to shake up the market. Let's check your contact list. I'd love to talk with you again and help optimize some SaaS spending for your fellow companies. Thank you.
That was fast. OK, judges, questions, please. Come on. Oh, there you are.
Hi, thank you for your pitch. I've seen other companies in the space doing more or less the same. What's your UVP, your unique value proposition, and how do you compete with them?
Yeah, there are companies like TorHQ, Cledara, for example, managing the subscriptions. For the most of the time, they only manage licenses or provide discounts only to some of the tools, etc. And we do all of it. So we work with a lot of vendors. And we manage subscriptions and we spot and use licenses, and also we provide the corporate cards. So it's all-in-one solution, basically for free. Our competitors are charging fees, and we have a different revenue model.
Okay, Yusuf.
Yeah.
Thank you very much for the presentation. I would like to know why you have AI in this product, because I don't see the value added. Is it because we see a lot of startups that are putting AI in their pitch, and there's no need to have AI? From a background, IT background, solution can be found without putting AI. Why do you have AI, and what are you doing with AI?
We don't have AI yet. That's frankly one of the next R&D steps for us, like this year.
Sorry, it's me, because Spendbase is an AI-powered platform for companies. Okay, so the AI will be the next part. Could you explain to us what we are going to do with that?
Yeah, sure. We're providing spending insights for companies, and we want to provide more in-depth spending insights. That's why it's not implemented in the platform yet, so it's more kind of a big vision for the future. But yeah, we want to develop an engine to provide more insights into cloud spending, for example. So companies are overspending a lot on cloud. They're using much more. They're paying for much more instances than they actually use, for example. Also, cost forecast, etc., etc. There's a lot to do with AI here.
Okay. Well, thank you very much. Big applause for Sophia. Thank you very much for coming.
Thank you.
Okay. And we saw it before at the beginning of this blog how important it's becoming to provide democratization to certain investments, right? And so we've seen the tokenizing of many kinds of asset classes, including obviously the stock market. That was the tokenization that we all are we know it pretty well, but things start getting funkier when we start tokenizing other kinds of assets. And today, what we're going to see here is the fastest growing platform to tokenize and invest in wealthy and very expensive assets, things like art, things like luxury watches, things like car. So if you ever wanted to own a piece of a monnaie, this is your chance. So please welcome our next startup, all the way from Germany, the CEO and co-founder of Timeless Investments, Malte Hosler.
Thank you for the kind introduction. You basically told everything about our product already. So we are unlocking a complete new asset investment category for everyone. So do you know what Oprah Winfrey, Bill Gates, and Jay-Z might have in common as super rich individuals? They are known as passionate investors. So they are investing millions of dollars in luxury watches, art pieces, or collectible cars. And let me tell you why this might be a clever and financially rewarding idea, and why they do this. Because the collectible investment index, which is out there, has outperformed the MSCI World Stock Index over the last decade of more than 40%, which is a great idea to start with real asset investment right now. So how to do this? Because Timeless is there to enable everyone now to have access and the right curation with expertise and with a lower investment barrier and the capital to do so, because it was only remained for a very few people out there in the market to participate. And how we do it, we are sourcing assets, buying them, curating them, shipping them to our bonded warehouses all over the globe, storing them, insuring them there, and then tokenize them, and everyone can buy a fraction of each collectible, and this fraction costs 50 euro. And then you can instantly liquidate your investments on our platform using the peer-to-peer trading environment, or you even buy and hold and wait until this asset is getting sold off from the platform and you're getting instantly paid out with your profits and your investment amount. So we basically built a category leader and a European leadership for now. We started in 2021 and now have more than 30 million euros of tokenized volume and assets under management, around 500,000 registered users, and more than 70,000 investors right now. We are spanning across 8 categories because we believe in diversification in this category itself. So it's ranging from traditional collectible investments, you heard it, luxury watches, vintage watches, art pieces, and stuff like this, to more modern collectibles like sneakers, or even trading cards and Lego. We always have internal and external experts to create this and manage the whole asset assortment for us. So we want to become the leading marketplace for these kind of collectible investments, and we are not stopping because we only scratched the surface of it. We see that there is a 65 billion opportunity in euros until 2026 in the European market alone, which are collectible assets which are available for tokenization, yeah, and investment services. And we also see that the ones who are today affordable to invest into collectibles are already doing a big increase in their share of wallet. So originally they spent 5% of their private wealth into collectibles. And now they're tending to already spend more than 20%.
We're out of time, Malta. Final word.
Final word. Yes, we are looking out for partnerships and investors. We are backed by great investors from EQT and Porsche, but are looking for B2C partnerships and additional funding for our Series A round. And yeah, maybe all of us will get a bit more Oprah or Bill or Jay-Z in the future by investing into collectibles.
Okay, big applause to Malta. So the Porsche outside is yours, right? Porsche outside?
Unfortunately not.
No, it's tokenized. Okay,
yeah.
Questions, judges?
Hello, thank you for the presentation. How do you choose the assets? Which are the main variables you have to take into account to choose an asset?
You can compare it with stock analysis, and we do asset picks. So we are looking out into individual dealer offers, right, from our partner network, or we are looking throughout auction sites to see which kind of assets are being undervalued at the moment to be bought, right, from us. And then we are doing comparable analysis. So we are looking after comparable items for transactions or offers in the market to see if we can buy it much way below a fair market value to give all our investors a good investment opportunity. That's actually how we do it, but with an internal team.
With a minimum IRR or not?
Sorry again?
A minimum IRR, I mean profitability?
Yeah, so we have a 12 million euro annual revenue. We currently launched our first revenue retention feature, which is a worldwide first savings plan into collectibles. So you can invest from 50 euros now automatically, not deciding each individual investment decision on your own. It's doing this by an algorithm on our platform. To increase revenue retention, we have around 1 million of monthly turnover right now. So that's basically our current level.
Okay, well, we're out of time. Thank you, Malta.
Welcome.
Dankeschön. Big applause. Thank you very much. Let me ask you something. Who here, raise your hand if you do some kind of wellness, well-being stuff for yourself? Raise your hand. Up, up. I want to see how many hands. Okay, most of you. Those who are not raising your hand, what's wrong? You know, you need to achieve life balance here. Now, for those of you that are doing it, who is paying for that? Are you paying? Is your company paying? Well, we're here to change that. So our next startup is precisely going to get the companies to pay for your well-being, to make you happier and more balanced people and workers, because we work very hard. So please welcome our next startup, all the way from Spain, Ana Zamora, CEO at Vintas.
Well, can I see the presentation on screen? Ooh. Okay, it doesn't matter. Hi, everyone. My name is Ana, co-founder and CEO of Vitans. As the speaker was saying, I want to start actually by a quick raise of hand. Sorry, it doesn't. I think we need to start. Not going through. Sorry, just a live TV. Cosas del directo. Oh, there we go. Now, great. Quick show of hands. Who here agrees with this statement? Happy employees make great companies, great businesses. I mean, I think it's universal, right? We all believe that this is the case. However, you know, when we go out to the market, let's see what happens. We looked at an international study, well, actually 3 different international studies covering the world. And they say that 23% of employees are engaged. That's very little, only 23%. Nearly 60% of them are demotivated. And about 18%, nearly 20%, are thinking of resignation. So with this data, we went out there and asked 1,000 employees to see how they feel about it. And this is what they said. 74% of them said they'd be more productive if they felt better at work. Nearly 95% of them said it'll be beneficial to have more investment in their well-being. So what are the companies doing with this? Well, they go out there and find a gym, a mental health, a nutrition, etc. provider to face what? That employees are not using it. Those are average rates of usage, of engagement from employees, and companies are paying for the entire population. So why is this happening? If we're all different, why offer the same benefits to everyone? But not only we're not all the same, but we have unique and changing needs. They can change month to month, almost week to week, almost day to day. With personalization, we've achieved over 95% engagement from employees while helping companies to optimize their spend and maximize their impact. With our technologies, companies can select the benefits they want to offer cover for, an amount and frequency, and select some rules of reimbursement. So it's 100% personalized for the company. But also the employee can go and use the gym they want, the mental health provider or nutritionist of their choosing, pay for it, and claim reimbursement from our app. And we process the reimbursement directly into their bank account. And this is a global problem. We're already reimbursing employees in 3 different currencies, in 6 countries, and we've made reimbursements to over 1,000 different providers. So that's a lot of providers for any company to manage. Our model is a business is a software as a service where we charge a monthly subscription and we get some additional revenues from the insurance products. We distribute directly to companies, but we also partner with global insurers to help them enhance their suite of solutions for their clients. We expect to reach 1 million in ARR this year and 5 by 2026. So if you want to know more about us, you can visit us at Vitans, and you have our contact details on screen as well. Thank you.